Well, there are a couple things about that. One is, once we get on, if we were to go down that path, it's very hard to pivot and get back to open up the government. I frankly think we ought to. We need a deal, make sure that DHS, TSA, Coast Guard, FEMA, all those agencies are funded. And so I'm hopeful there will be a breakthrough on that. That's going to require some, obviously cooperation from the Democrats, which we haven't seen a lot of so far. But we want to get to the SAVE Act. We also, as I mentioned, we've got a housing bill that we can pivot back and forth to if we get a deal to open up the government. That's harder to do once you're in the throes of a talking filibuster. The talking filibuster issue is one on which there is not certainly a unified Republican conference, and there would have to be. If you go down that path, you're talking about the need to table what are going to be numerous amendments and an ability to keep 50 Republicans unified pretty much on every single vote. And there isn't support for doing that at this point. As I've said, and we will get on it, and we will have a vote on the SAVE Act.
Hey guys, Carlos Cortez here with another episode of Scriptures in Wall Street. I hope you're doing well. Hey, if you got a second on this video, go ahead and like and subscribe. Our Rumble channel, our Scriptures in Wall Street, is now on Apple. You can follow us there as well as Spotify. And if you're on Rumble right now watching this, or YouTube, please comment or like or subscribe. It gets the algos working and gets the podcast and obviously the message out there. I'd appreciate your help on that. Doesn't cost you anything. Anyways, I am so excited to be talking about AI, retirement, what Elon Musk is still saying about should we save, should we not save, all these fun things that are really scary. They seem great in the surface level of things, but as we dive deep into it, what is really happening? And are we becoming more reliant on AI? You remember back in the day when they had word check on Microsoft Windows? You would spell out a word that maybe you didn't always get it right, and you relied on the Microsoft spell check to correct your spelling. So you can right click it because you'll get a red squiggly mark. And at the end of your word processing venture, whether you're in school or typing up a project for work, you just right click all the spell check errors. And what it actually did is you became reliant on the software. You became reliant on the system fixing you, and you became lazy actually on your grammar. It happened to the best of us, happened to me. It's the same thing has happened with text messaging. So as you are texting, maybe you're fat thumbing and you're not being as precise, and you're relying on the iPhone or the Android, whatever platform you're using, to correct yourself. And a lot of times we send it with the red circle, and we send it with the red line, messing things up. And we don't know how the auto translate or autocorrect is going to be received on the other end. And this blows up conversations sometimes, getting heated battles. So make sure you're sending a text message that is correct, because those words can get really jacked up at times. I've seen those funny screenshots, memes where it was auto-corrected and it blew everything up. So I say that because obviously AI has been taken over for a long time. AI has been taken over for years now, and we thought it was the internet, but this whole time it has been an algorithmic platform and open AI that has been tracking, tracing, and controlling everything. The reason why I say that is because there is something called the retirement shock that I see what's happening. And the retirement shock is like an 8-prong approach, almost like a perfect storm approach. And I'm not here to create havoc or fear. I'm just here to see how as I see it. And everything on this podcast is meant for information and education purposes only. I'm not giving investment advice. Although I'm a licensed financial advisor, I am not giving investment advice. If you would like investment advice or financial planning or some type of consultation, give us a call, 813-448-3446, and I'll be happy to help you personally. So the retirement shock, what is that? That's a market downturn. That is a market downturn while withdrawing income. That's a market downturn and you're withdrawing income and inflation is high, prices are high, and healthcare is rising. This is what I call a retirement shock. Now, do you really think this could happen? Or am I just shooting a breeze and talking out of my butt? This is happening right now. We have a high stock market. We have inflation that quote unquote is cooling off, but the prices are still high. Long-term care costs is through the roof. And the scariest part is that because the prices are high, our withdrawals are high. We see 401ks, we see IRAs, we see many of our qualified accounts all-time high. People are withdrawing their funds, paying the penalty, paying the taxation. They don't even care if they're under 59 and a half, if they have access to it. Many of you have called and said, you know what, Carlos, you are right. You don't own your 401k. I thought I did, and they really pissed me off. I called Empower. I called Fidelity. I called Jan Hancock. I called Prudential. I called all these financial institutions. They said I can't take my money out. I own a company, and I can't even take my own 401k out. This is real conversations, guys. And this is why I say you are a participant. You don't own your 401k. Look it up. Go ahead and Google it. Do I own the money in my 401k? It's very similar to, do you own the money in your bank account? Do you really own the money in the bank account? Well, it says technically yes. You know what? Let's just go ahead and do that right now, raw. Let's just go ahead and do that so we can show you what we mean. Let's see what Google AI says. Yes, the money in your 401k is yours, but with conditions. You own all personal contributions, invested employer allowing you to take it when you leave a job. However, it is tax advantage, meaning the government restricts withdrawals before 59 and a half. We know that. Key details regarding 401k ownerships. There's a vesting schedule. We get that. Typically, after certain years, the contributions that you have can be yours. Portability. If you leave your job, you can roll over the vested balance to an IRA. That is true. Early withdrawals. Accessing funds before 59 offer triggers a 10% penalty. That's the trigger that I was telling you about. I'm sorry, the 59 and a half rule. If you take money before 59 and a half, you will be penalized if your plan administrator allows that. Control. You're responsible for managing the investment choices for the assets classes. Taxation. Obviously, 401ks, the money is yours, but it's taxed upon withdrawal, generally in retirement. Let's dive deeper. I don't really care for those answers. Technically, you do not legally own your 401k in the same way you own your car. Rather, the assets are held in a trust for your benefit, and you are the beneficiary. However, in practice, the money is considered yours in a few important distinctions. So what is it, guys? One, Google simple search said, yes, you own it technically. The other one on AI mode says, technically, you do not legally own your 401k. So what is it? This is what I'm talking about, guys. Like, how does it make you feel that you don't even know if you own your 401k? I'm not blowing smoke up your butt. This is real life situations. Unfortunately, people are finding out they don't own their 401k. They don't have access to their 401k until it's too late. So the retirement shock that I'm really talking about here is that, imagine if we just had a market downturn, and we're going to pull up the charts here in a second. Imagine we had a market downturn while withdrawing income. This is real talk, real life scenario. We have inflation elevated. Is inflation elevated? Yeah, I think so. Even though it's been cooling off, the prices are still high. Is long-term care costs, is healthcare costs rising? Your insurance premiums rising? Yes, these are mandatory things that we need in order to survive. And just because you're retired, it does not go away. This is the retirement shock that we are seeing. We understand Proverbs 22:3. The prudent see danger and hides himself, but the simple go on and suffer for it. This proverb basically highlights the wise, far-sighted people and avoiding the tribulations and the trouble to come while naive and reckless individuals ignore the risk and face negative consequences. It emphasizes forethought, obviously caution. It warns us of just avoiding unnecessary temptation and danger. So we want to understand that the prudent person, which is you, the steward, has wisdom, has foresight, and takes action to avoid the harm and evil. And if you're a man providing for your family, this is a risk that you need to protect your household from. Is the prudent sees danger. And many of you have bought this beautiful precious metal called silver, thinking this is prudent and that this will protect you forever. But we've seen it recently in the charts. We've seen it, how it can come crashing down. And we'll talk about silver. We'll talk about precious metals and contrarian investing and things that go up when a dollar goes down. But how many times do we have to say that red money is red money? What is red money? Red money is the ability to lose money in an account that goes up and down. Red money is classified as unlimited losses, unlimited gains. These are accounts that are market-based generally. Even your real estate, your crypto, your precious metals, your ETFs, your Bitcoin, your stocks, your bonds, your 401ks, these are red money investments. We need to understand that, yes, although you are 100% correlated to the market and you could or do own most of these assets outside of 401k, outside of FDIC, you do own these assets. But what good is the asset if you don't even have full control of it and you don't even know where it's going to be at? You can only speculate it's going to be at X amount, and then hopefully you can draw off of it. But if your principal is in red money, the retirement shock still comes into effect. You still have a market meltdown. You still have fees. You still have withdrawal income that you have to pull out. So your principal is going down. You become more of an aggressive investor in retirement. You go from candy apple red cutlass, top down, chilling with the oldies, with the wife, sipping on your favorite drinks, non-alcoholic drinks, obviously, chilling in the right lane. Now you got to put that thing in super sport mode. I didn't have it back in the day, but you're throttling that carburetor and you're on the left lane with the top down. And now you're driving in a lane that you don't want to be in with an old car. You hit a pothole. Well, that's us in this retirement shock. Because what happens is when we have this market downturn, whenever it is, we're going to have the need to withdraw our income because our bills don't stop. The prices are still high. And now we have healthcare issues because we're older. Guys, what I'm talking about is reality. And if you're retired right now, this could be a huge, huge, huge shock to you. I didn't even talk about taxation on your IRAs. I didn't talk about any of that stuff. What I'm saying is that if you're just thinking everything's going to be okay because you got money in the 401k and IRA and it's just going to continue to grow, that is not a stable plan. You literally have to stress test your portfolio and find a way to protect it. If you're interested in doing some of that with most of your 401ks or IRAs or your retirements or non-qualified or even the banks, in my opinion, are not safe. We can talk about KRE. We can talk about, the crediting methods that basically the Fed funds rate, commercial real estate, how that is exposing the banks still to this day and it's not being talked about. Your money's at risk. Your money's at risk. What is even scarier is that people put money blindly in the bank account, FDIC, and they don't even own it. You're just a beneficiary of it, and you can just simply lose it all if the bank does a bank bailout. Of course, let's not take my word for it. Let's look it up using our wonderful friend Google, which is what the main public uses. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. Let's see what Google says. Holy smokes. Did you just see that? I mean, this is like what is happening right now. Do I own the money in my bank account? That's all I did. Technically, no. Who wants to hear that? Do I own the money in my bank account? Well, if you're a Scriptures and Wall Street listener, this is not a shocker. This is very redundant to you because I've been talking about this for years now. Technically, no. It becomes a property of the bank and you become an unsecured creditor holding a legal claim, an IOU at that fact, to that amount. While you retain the right to withdraw and use the funds, the bank uses your deposit to lend and invest and make you reliant on bank safety regulations and depository insurance. Yes, key takeaways on bank ownership. Legal ownership, upon deposit, the bank takes the title to the funds. Creditor status, you are technically a creditor of the bank and the bank has liability to repay you on demand. This is straight up law. They even have attorneys. Like if you ever have a bank bail-in issue, you can contact Smith Gamble Russell and they have actual cases. They have practiced law in this space. So there's attorneys on it. So that's how you know this is real talk. This is not BS, guys. So when I come on here and say you don't own the money in your 401k, you don't own the money in your bank, do you think I'm BSing? No, this is reality. And the fact of the matter is that we have people literally with millions and millions and millions and millions upon millions. Did I say millions? We have millions of dollars in the banking system that they have no idea that they don't own it. They just have the right to withdraw it as a beneficiary, but you've relinquished your right to the bank in hopes that they're going to be solvent. God forbid they do commercial real estate practice. God forbid they loan way too much, because banks never do that. And hopefully they're helping out Joe the plumber and not the BlackRock guy that wants to buy a $3 million rug and feed a $75 million jet. Hopefully your bank will never do that, right? Because they have the same religious beliefs, or they go to the same bar, or their kids play hockey together, or they go to the same synagogue together, or whatever it is. That has nothing to do with your retirement, is what I'm getting at. It is time to be proactive. This is biblical. Guys, it says, Proverbs 22, that he gives us signs, but you take no action. And for being a lazy ass, you're going to suffer. Straight up. You're going to suffer. This is your fault. This is your decision if you don't make any moves. Your financial responsibility is 100% on you, not anybody else. You have to take ownership of that. And part of that is listening to these knuckleheads. They say, oh, yeah, you got to invest in the stock market. You need a Morningstar report. You need this analysis. And you need to go to put your money in a CD. It's FDIC insured. Like, how idiotic is that? It's disgusting. And that is the straight truth. I'm not here to protect your feelings. I'm here to tell you the truth. Some people call me, hey, you're pretty arrogant, Carlos. You're this, you're that. But I kind of like you. But yeah, you say a lot of offensive stuff. I'm like, good. Go watch Dave Ramsey. Tell him that life insurance is the devil. Tell him that go invest the rest. Buy life insurance and invest the rest. Meanwhile, you don't even know that the money that you're saving into is going to be financially inoculated when you hit Social Security. Once you hit Social Security, they capitalize you they put an earnings test limit on you on how much you can withdraw from the money that you've been saving your whole life, but you don't even know because you've been saving in the wrong parking spot. It's like ordering chicken wings at a restaurant, and you're not going to take cold chicken wings home, but you want to go to that restaurant and parking at number 1, number 2, number 3. You text them, hey, I'm here. I'm ready for my meal. And you're parking in number 4, and you told them that it was number 2. Or number 4 is for a handicap spot and not a to-go order. I know because I eat a lot of chicken wings. I love them. But it's the same deal. Your 401k is parking in the wrong spot. Your bank CD is parking in the wrong spot, meaning you're trying to get fed. You're trying to live. You're trying to have dinner. You're trying to retire. And you're parked in a wrong parking spot called a 401k or possibly a bank CD or possibly a gold IRA, possibly a variable annuity inside of an IRA. There's so many wrong parking spots that could not be suitable for you. I just don't know. You got to give me a call so we can have analysis. But there's a lot of traps out there. And one trap that is obvious and apparent, and I'm not blowing smoke up, you know what, is that retirement shock. Are you prepared for that retirement shock? That retirement shock is so real. There's a market downturn coming, and you still got to withdraw money. You still got to pay your fees. Inflation hasn't really cooled off. There's deflation, but prices are yet still high. So you're spending more money. You're withdrawing pre-penalized at your 401k level. This is the retirement shock, man, that unfortunately will be devastating for many, many Americans. And I want to protect you. This is why I have this show, because I care about people financially. I want to make sure that you understand what's really at stake. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. So how many times have we gotten lost in the minutia of the everyday life? We've gotten fat, we've gotten lazy, we've gotten complacent, not just in our faith, but also our fitness, maybe our finances, maybe our marriage, maybe our family. But we've gotten complacent, and we constantly need to continue to grow. And one of the things I was weak at was in my fitness. As a former athlete, I thought I had it all. My ego got in the way. I'm like, I'll do it later. I'll do it later. Up until now, I have been able to focus on my fitness. For those of you who've been following me for 3 or 4 years, you understand that I've gained a lot of weight. I've used the excuse of having 4 kids, a marriage, a business, helping out at church, all these excuses. And I keep putting myself in the back burner. This is deadly. And what I love about this company, what I love about taking ownership, is that GetMeLeanUSA.com has the ability to introduce natural groundbreaking peptides. What your body demands, what your body needs to release those fat stored cells, to build muscle, to gain your physical being back to where it's naturally supposed to be. We're not talking about big pharma saying we're going to come out with the weight loss drug. We're not talking about losing muscle. We're talking about gaining muscle, gaining your physique back, controlling your appetite, giving you the edge that you need to help you get your body back in check the way God intended it to be, by using his resources with America First products, with America First company that aligns and believes in what you believe in. Introducing GetMeLeanUSA.com. Get in. This is going to be groundbreaking, huge business opportunity, as well as a huge groundbreaking technology that is going to change the landscape. So I know good things before I see it, and I highly recommend you get in. All you got to do is click the link below and get you some fit, get you some lean, and get fit and get lean. This is not going to do everything. Of course, diet and exercise, you continue your walking, continue your protein intake, but man, does it make it a whole lot easier to get in shape. Look at me, I've lost 60 pounds, but this is actually fundamentally a great recipe to get back in shape. And I can personally attest to the amazing effects of this product. So go to getmeleanusa.com. You won't regret it. You can cancel anytime. They're affordable and yet they're effective. And you are supporting our show. You're supporting yourself. You're supporting a mission. There is an affiliate program attached to it if you would want to share it with your friends and family. There's a whole nother opportunity there. But more importantly, let's get your fitness back in check. God bless you. Carlos Cortez here, signing out. So check me out here. All you guys know this puppy. This is called the QQQ. This is the Nasdaq. We are currently experiencing a little drawdown right now. This is on a daily chart. Nothing crazy here. So recently the Nasdaq has been going down, but man, look at this bull run on this Nasdaq, just massive in 2025. Is this sustainable? Is this sustainable, guys? You see this massive drop in March and February 25, just this time last year, and how it just peaked or troughed in April. So February to April, we just had a massive correction last year. People were freaking out. QQQ was at 536 and ended up all the way around 435. Massive correction. And then we had the explosion. Well, we're starting to see the same characteristics here. And keep in mind, when it went down, it actually went back up and went right back up before it just crashed. We had a death cross here. I had a warning, a red death cross here. A warning. I'm sorry, the purple is our warning of a death cross when that moving average just hits that price, and then it just falls off. We had another death cross warning recently here on February 10th. So we need to understand, why is this? We need to understand that we have this death cross here. It's going to hit the moving average. So who knows what's about to come? All right. Let's look at our historicals. Back in 24, we had another death cross and market fell off just a hair. I'm looking for all my purple boxes. Purple boxes here. Back in 2022, we had a death cross warning. It hit. We had a red box. Boom. It just fell off from 367, the QQQ Nasdaq, to 278. Another death cross here at 383 in January 2022. And it just fell off all the way to 325. Another one back in May of 20. Obviously, that was COVID. We understood what happened in COVID. Another one back in 2018. I believe this is when the inverted yield curve was prevalent. And so as we look at these death cross warnings, guess what we have right now? We have a death cross warning right now. Now it's starting to turn back up, but don't be fooled. I really feel this is a head fake before it can come down. So I want you guys to understand that a retirement shock, what I'm talking about, is reality. I mean, this is like me being the weatherman and telling you that a hurricane is forming. I'm looking at all the facts that make a hurricane. You know, the pressures, the dry air, the warm water. This is equivalent to that, and have a spaghetti model of the retirement shock of a market meltdown, high income that people need in order to survive because of rising cost, healthcare costs, and just consumer staples alone. So if you have a retirement, give us a call. Let's give us some safe, de-risk, fixed income options that protect your money. That doesn't mean you don't grow your money. It just means you're allocating a part to it to de-risk and have the ability to save your retirement from a retirement shock, to save your retirement from a death cross situation that I'm showing you right before it happens. Like literally, we're going to look at this February 2026. Keep this podcast open and screenshot it 2 years from now. And you can't say I told you so. I'm not saying it's going to drop right here. I'm just saying the likelihood of it dropping is becoming more and more realistic, on top of the retirement shock of all the negative detrimental attributes I just quoted. And I'm just going based on history. Past performance is not indicative of results, of future results. And I'm not giving investment advice, as you know. I'm just saying the behaviors, historically, this is what it's been happening. Then we cross over. The reason why I want to talk about the Nasdaq is because AI is so powerful. And then we have this one very, very popular ETF that covers mainly AI. Now, what's interesting about this ETF, AIQ, this is kind of going with the Nasdaq. About 40% of these companies are in the actual QQQs, the Nasdaq. So what I want to say about the Nasdaq is obviously the Nasdaq, it crashes harder than bubbles. The tech burst hit immediately. And there's patterns, right? The 2000.com, the 2022 sell-off and the tech sell-off, the Nasdaq composite, it still declines, but more gradual and less cliff risk. So you have a Nasdaq 100 and a Nasdaq in itself, the composite. The Nasdaq 100 is extremely liquid, and it is the ETF QQQ, but it also has pension funds and momentum traders, and there's a lot of crowded short sellers on the Nasdaq 100 and both Nasdaqs. But Nasdaq, the composite, liquidity spreads thin at times to thousands of different names, and it's less forced selling pressure, fewer algorithmic AI trading bots. And so when we look at the difference between the Nasdaq and 100, is basically it's leveraged bet on AI versus tech names. So when AI is hot, the 100 screams higher. When AI cools off, the Nasdaq 100 crashes faster. So they do have a lot of correlation. So the Nasdaq 100 is going to track basically more momentum of AI. It is bubble monitoring, so you are going to see a lot more chances of bubbles on that. But the Nasdaq composite is long-term, more diversified growth. A lot, I don't want to say less riskier. It's just more companies, more stable companies, right? And so I think the problem here, what I'm experiencing, is that people are relying on the Nasdaq in their retirement, and they're not realizing if they have the QQQs or if they have a Nasdaq 100, it is still subject to massive risk. We're getting greedy with this AI. We're getting very greedy with this AI, and you're basically like a spell check. You're getting used to the returns and not realizing, hey, there's some signs out here that maybe I should protect my money. Maybe I should do something. And here's the cool part is that I'm not saying the Nasdaq is not the place to be at. I'm not giving investment advice on that. What I'm actually pro Nasdaq, because there's no way you're going to stop AI, the track, trace, control agenda. My thing is, let's make money off of it. I have several green money solutions that track the Nasdaq. I have a new company that is offering in many states 16% bonus if you're younger than 75 years young. 16%, no fee. You can't add to it, but it tracks the Nasdaq 100. It gives us a participation rate. Really love that. And if you're interested in that, just go to greenmoneysolutions.com, fill out your information, and let's just have a conversation, see if it works. If not, that's okay too. But as AI is taking off, you're going to want to have access to the Nasdaq or the upsides of the Nasdaq. However, if you're buying AIQ, which is a very, very popular ETF, if you're just so into AI and you think it's going to be the future, just be very cautious here that you're not investing retirement funds, because look, this thing has grown substantially. Let's go back to, oh man, let's go back to 2020. This was at 1369. I remember when this was launched. It was like really cheap, like under $10, I believe. And yeah, in 18. I remember this was launched in 2018. We're like, what the heck is AI? And then it fell off. It came out, people thought it was cool, and then it just fell off. And here's that chart. It went to 13. So yeah, I think it launched 11 or 12. And then it went to 13 and it fell off a little bit. And then boom, it just took off. Again, those purple death crosses. Anytime you see them, the market goes down. Purple death cross, you see sell, 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 sell. Death cross here, death cross there. Imagine if you had your whole retirement based on this. And guess what? I got a death cross right here. Same as the Nasdaq. So this is going to be our number one ETF that follows the AI. If you say, you know what, I want to invest in AI, I don't know how to do it. Generally speaking, most people will just buy AIQ and be done with it. But we are starting to see a slowdown here, although we know that AI is not slowing down. It is just riskier. So I want to make sure that you guys understand the difference of AI, the retirement shock, because if we're taking money out of our IRAs and 401ks, there's fees to pay. The market goes down 10%, and you still got to pay yourself, let's just say 7%. So for instance, if you had $100,000 and you were in a variable product, let's just say a variable annuity, let's just say you had $400,000. Market goes down 10%. You just lost, theoretically speaking, $40,000. And then you got to pay yourself, your 4% out of your $500,000 account. So let's just say $500,000, market's down 10% on $500,000, right? So now you're at $450,000. Then you get hit with your variable annuity fees of, let's just say 3.65 an average. That's another 16,420. So 450,000 minus 16,420. You're at 28,500, and you still got to pay yourself 4%. So imagine you had a $500,000 variable annuity in the S&P 500, right? So $500,000. So 500,000, you times that by 3.65, which is the average variable product on the insurance side. That's negative $18,250. So you had your $500,000 in your variable annuity product or variable universal life product with crazy fees. So now we're down to $481,750. But guess what? The market fell off 10%. So now we're negative $48,000. We minus our 10%, which is $48,750. It's $433,000. We're at $433,000, and we still haven't even paid ourselves yet. You times that by, let's just say you have an average withdrawal of 5%. And you take $21,000, $650 out. So now we're at $412,000. And we only took out 21 grand. And we started with $500,000. What if the market goes down another 10% next year and you still got your 3.65 fees? You see, this actually says that you could lose all your money in red money when many people think these are safe products and they're not. I have a client that I brought in a long time ago who had a variable annuity product. Market went down 10%. They still had to take out 5%. I mean, she only took like a year's worth of income, but she was paying over 200 grand, 190,000 over the past 15 years, and she didn't even know it. And she didn't know it because the S&P 500 was growing and growing over the past 10 years in a decade. So she never questioned the fees. But the retirement shock is there. It may not happen to you, but it's there, waiting like a thief in the night to kill, devour, and destroy. I don't want that to happen to you guys. So here is the S&P 500. A lot of Americans rely on this to fund their lifestyle. And look what happened here recently in February 25. Death cross, boom. Market's up. Great. We're starting to see sell signs. I don't have a death cross yet. But imagine if we get a death cross here shortly, if it hits this moving day average or warns that it might hit the moving day average, we're going to see a fall off. So I worry about, not worry, but I'm concerned about many of our God-fearing patriots that are listening to this. Like, when is it enough? The retirement shock is right there. We have all the signs. We had an inverted yield curve in August of 2024. I'm sorry, it uninverted in 25. And typically 18 to 24 months later, we see massive corrections. Don't believe me? Look at what happened in 2018. Look at what happened in 2006. Look at what happened in 1999 and 2000, before the 01 bubble, before the 08 crisis, before the COVID happening. So once we see that uninverted yield curve in the bond market, it gives us signs that, hey, something's not happening or something's wrong. Maybe I need to de-risk my portfolio a little bit. It's serious, man. You start adding all the inflation issues. You start adding the de-inflation issues. You start adding the, foreclosures that are up right now. Just because interest rates went down doesn't mean home prices are going to come down. That is not how this works. We have to start being stewards of our money and start understanding that we need to start protecting our retirements now before it's too late. And definitely get secured on your banking issues, because it is not safe to have your whole retirement in a bank account where they can, A, you don't own it anymore. That's not even prudent. And B, you are subject to the banking solvency provisions of that particular bank. Doesn't matter if you're credit union or FDIC, doesn't matter. Like, you've given up the rights to your money to that bank. I don't know how that makes you feel, but my clients, they want dollar for dollar reserves. They want contractual agreements. That's what the wealthy are doing. They're getting contractual agreements on their money now. Doesn't matter what state you're in. They want contractual guarantees. And that's really what I'm trying to stress here, is that banks are not in your favor, man. Wall Street's not in your favor. So let's be prudent here and let's have a conversation. Let your portfolio and your money resemble how your faith is. If you're not aligned with your advisor spiritually, mentally, academically, politically, what in the heck are they doing managing your retirement? They literally could fund something that you do not believe in or do not agree with. Let alone, how do we know what your standard deviation is of that portfolio? Like, all my clients understand standard deviation. We have a bucket of money that is safe, that's not a security, and then we have a bucket of money that requires a little bit of risk, but managed risk, that has a lower standard deviation, a higher return. And I honestly believe that when you have both of these assets working, yellow and green for you, you can create a perfect retirement. Not a perfect retirement, but you can create a holistic retirement that will benefit you. And don't take my word for it. Guess who else is saying that? This is kind of comical, but I was just reading some articles, and there's an outlook out there by T. Rowe Price. And I'm not here to promote T. Rowe Price. They were just nice enough to have this article out there. And it just talked about like certain stats 45, 8 trillion mark. US assets cross 45.8 trillion. Average Social Security benefit is close to $2,000. And centurions are growing from 2010 and 2022. 53% of overall participation in private sector are retirement plans. And there's literally $4 trillion in target date assets. The average retirement from 55 to 64 is 538,000. What was fascinating to me is that this article before, this is a white sheet, but I wanted to show you this one actually. What's fascinating is that the 5 things you need to know to shield your finances from a crash. So the Guardian is actually predicting that the AI is going to introduce a crash. Bubbles are hard to predict. Bankers at UBS, for example, have positive predictions for AI in their year ahead. Acknowledging risk in the sector, they pointed out to the capacity for much more spending on technology. Guys, whenever we see anything this violent going up, if the bubble is in AI, it does not stop there with the sell-off. All other boats will start sinking ship too. You'll start to get conjugation, and sell-off in AI will affect everything. So he's talking about correlation. So there's no losses until you cash in. And so that's the big problem, is that I've said the Mag 7, the Magnificent 7 have completely just brought everything up in the markets, and they'll bring everything faster than it came up, and it will be a retirement shock that you would not believe. So even T. Rowe Price has said this, as well as The Guardian, and their solution, unfortunately, it's almost not what I would do, but it says diversification is best. Now, their version of diversification versus my version of diversification is completely different. I like contractual guarantees. So if there's one principle that never goes out of style in investing, is diversification. A senior equity analyst at Hargraves and Lansden, spreading investments across different sectors and asset classes remains the simplest and most effective way to guard you against surprises. So he is right about that. But when you're dealing with red money advisors, they're going to say, oh yeah, buy some bonds, buy this income fund. In reality, it all goes down. But diversification for me is having a contract guarantee on your principal. So having that ability to do that is what we want to do. And all you got to do is just give us a call, because there's so much I can talk about just on the risk that is about to come. And you don't need to participate in that risk. There's things that we can do right now to help protect you and grow with the NASDAQ. Maybe I'm wrong. The market doesn't go down and the market continues to rise. Well, guess what? You benefit from that. You benefit when the market goes down because you lose nothing. And we get some of the upside when it does come screaming back up. So there's so many options. You just got to give us a call, 813-448-3446. Hey, like and subscribe our YouTube channel, Rumble, or Scriptures on Wall Street on Spotify or Apple Podcasts. I really appreciate it. And also, if you're just watching us, please leave a comment, whether it's good, bad, or ugly. Tell me you don't like the color of my shirt or whatever you want. It just feeds the algos. We need to get my personal channel up and running with some good followers, and I appreciate that. A lot of you have called and said some awesome things. If you have any questions, you want me to talk about anything, just email me at info@cortezwm.com. Ashlyn, thank you so much for the allergy advice. That has helped me tremendous. So shout out to Ashlyn for giving me some advice there. She emailed me and said, hey, take this, and it actually worked. So God bless you. Thank you so much. And also, I'm staying sharp. I'm taking these awesome things. These are peptides. All you got to do is go to getmeleanusa.com. They have these juices that help you lose weight. They have these peptides in a pill form. They help you burn off the fat, and more importantly, suppress your appetite. So you're not eating a cheeseburger every 5 hours or 4 hours and getting fat off that. Controls your appetite. And more importantly, I like their sleep products. My favorite package is the performance package. I believe it's like $300, $340, something like that. You can get 10% off a month if you auto subscribe. You don't have to get that if you like. My two favorite products is the Fit, which is an awesome orange drink you drink in the morning. For those of you that are on GLP-1s or Ozempics or Mounjaro, this is going to be good for you to drink because it builds muscle like creatine, actually 4 times more the photosynthesis in these Fit drinks. Also, the lean is good for fat burning. It's just amazing product. So go to getmeleanusa.com. If $300 is too much, then you can go to a lower package or just get those two. I know they're running promotions all the time, but go to getmeleanusa.com and purchase you some awesome peptides. And also, if you enjoy the water from the AmericaFirstWater.com, go ahead and go over, if you haven't had a chance, go to AmericaFirstWater.com, learn about ionized water, getting rid of the toxic fluorinated water that causes cancer, that causes us just the disgusting acid in our body from the foods we eat, from the drinks we drink. All this stuff is, as soon as you put pH drops on it, it turns acidic, and you can start to see the pH levels and how it just really destroys everything in your body. So hydration is key. Go to AmericaFirstWater.com and get you an amazing machine. So with that being said, guys, I'm out of here. God bless you. If anything I said today resonates with you and you want your retirement check to avoid the retirement shock, give us a call, 813-448-3446. We're here to help. And we love all you guys, and we love hearing about your situations, how we can benefit yourselves from our current tailored solutions. And we look forward in helping all you guys. God bless, and we'll talk soon. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. So how many times have we gotten lost in the minutia of the everyday life? We've gotten fat, we've gotten lazy, we've gotten complacent, not just in our faith, but also our fitness, maybe our finances, maybe our marriage, maybe our family. But we've gotten complacent, and we constantly need to continue to grow. And one of the things I was weak at was in my fitness. As a former athlete, I thought I had it all. My ego got in the way. I'm like, I'll do it later. I'll do it later. Up until now, I have been able to focus on my fitness. For those of you who've been following me for 3 or 4 years, you understand that I've gained a lot of weight. I've used the excuse of having 4 kids, a marriage, a business, helping out at church, all these excuses. And I keep putting myself in the back burner. This is deadly. And what I love about this company, what I love about taking ownership, is that GetMeLeanUSA.com has the ability to introduce natural, groundbreaking peptides. What your body demands, what your body needs to release those fat stored cells, to build muscle, to gain your physical being back to where it's naturally supposed to be. We're not talking about big pharma saying we're going to come out with the weight loss drug. We're not talking about losing muscle. We're talking about gaining muscle, gaining your physique back, controlling your appetite, giving you the edge that you need to help you get your body back in check the way God intended it to be, by using his resources with America First products, with America First company that aligns and believes in what you believe in. Introducing GetMeLeanUSA.com. Get in. This is going to be groundbreaking, huge business opportunity, as well as a huge groundbreaking technology that is going to change the landscape. So I know good things before I see it, and I highly recommend you get in. All you got to do is click the link below and get you some fit, get you some lean, and get fit and get lean. This is not going to do everything. Of course, diet and exercise, you continue your walking, continue your protein intake, but man, does it make it a whole lot easier to get in shape. Look at me, I've lost 60 pounds, but this is actually fundamentally a great recipe to get back in shape. And I can personally attest to the amazing effects of this product. So go to GetMeLeanUSA.com. You won't regret it. You can cancel anytime. They're affordable and yet they're effective. And you are supporting our show. You're supporting yourself. You're supporting a mission. There is an affiliate program attached to it if you would want to share it with your friends and family. There's a whole nother opportunity there. But more importantly, let's get your fitness back in check. God bless you. Carlos Cortez here, signing out.